Hey, what's going on, guys? Welcome back to Modern Options. Before we start the video today, I just want to thank each and every one of you for getting my subscriber count to about 170 subscribers at the time of this video. I feel like I just hit 100 not more than a week ago, and it's already starting to grow exponentially to 170, so thank you, thank you. So today I want to give you the truth behind 0DTE, or just some of my thoughts after trading the strategy for the past 4 months or so. I stated in my previous video, it's not a foolproof strategy. You're not going to get 100% gains. You're not going to get 100% profitability after each trade. What is going to matter is that you actually create a rule system that you will strictly follow. Along with having a plan is the consistency and the discipline to stay with that plan. This is a strategy where you can have 4 to 5 losses in a row, but if you keep your rules right and manage it properly, you'll eventually come back around and make your profit back. The important thing is, if you learn new lessons or if a certain part of your rule system doesn't work with the strategy, you'll have to adjust as necessary and keep moving on. I've done that a few times over the course that I've been trading 0DTE. So I didn't give you guys a recap of the past week and a half, so I want to go ahead and go over the trades and just some more thoughts behind it. So going back to September 7th, which was a Tuesday right after Labor Day opened, I did a put credit spread this morning. I sold the 45.05 and bought the 44.95. So on the opening this morning, Goldman Sachs downgraded its economic outlook due to the Delta variant just continuing to linger around, and the VIX was also slowly starting to rise. So in the morning, there was a downward trend. I expected a reversal after I saw these upticks in candles right here. So I opened up that put credit spread about 10:04, and I got stopped out 5 minutes later. That's not fun. That is a very unfun part of 0DTE, but it's definitely possible and it can happen. Had I just waited an extra 15 minutes or so, I could have gotten into a put credit spread maybe 5 or 10 strikes lower than that, and I would have been fine throughout the rest of the day. That's one very sad part about this, is you can get stopped out early and it would have expired worthless, but you never know what risk you're going to take, so you have to respect your stop losses with this strategy. So I respected the stop loss, got 2x'd out, but it is what it is. So on this day, I took in a premium of 70 cents, and 5 minutes later bought it back for 135. So not fun, but I lived to trade another day. It could have continued to go lower, nobody knows. And I also got excited that day because that was my first time trading with $1,000 after I hit that mark with this account. So I did a 10 wide spread, and I probably shouldn't have done that. I should have just kept doing 5 wide spreads. They've been working for me, and until I get more capital, maybe up to like $1,500 or $2,000, to not do a 10 wide spread yet. So mistake that I learned, and I'll implement it in my future strategies. So let's go to Wednesday now, and there are still fears of the Delta variant just lingering around and just unknowns within the market. That's what caused an initial bit of this sell-off. And some analysts said that the market was taking a little bit of a breather after some of the recent rallies that it had. So I opened up an iron condor this morning, with the put side being a 4500 and 45.95, and the call side being a 45.35 and a 45.40. So I took in a credit of 70 cents for this trade, and then got stopped out pretty quickly at 140. Let's go back to the charts here. I got stopped out 10:33, 10:17, so not even 15 minutes later, guys, just went into a downtrend and stopped me out immediately, and again, would have expired worthless had I held on to it throughout the day. But as I said previously, respect the stop loss. If you don't do that, you never know what's going to happen, and I have a video right here I can show you that you can lose every single dollar of your spread if you don't risk manage carefully. So continued to sell off and even went back below the long strike and then continued on throughout the day. But that's 2 losses in a row. Hasn't been a fun one. Let's go ahead and move on to 10 September, which was a Friday. And this day, there was a lawsuit that's been going on with Epic Games and Apple. Epic Games is the creator of Fortnite, where just shady business practices within the Apple Store about them not being able to have competitive markets for selling their own in-game purchases. So you used to be able to spend $10 to get some in-game currency, but that went directly through Apple, which charges a flat fee of 30% on all transactions. Or Epic started to do a $8 in-game currency fee that would go directly to Epic and just bypass Apple. Apple didn't like that, so they took them off of the marketplace, and then Epic put in a lawsuit, and then the judge favored Epic this day. So that caused a bit of the sell-off with Apple. Google followed, NASDAQ followed, and so did the rest of the S&P. So I entered this trade at 10:21 and got stopped out only 10 minutes later at 10:31. I sold a put credit spread for 44.75 and bought a 44.70. So on this day, I took in 65 cents worth of credit and then got stopped out at 135. So 2x of premium, not fun. As you can see, it did well for me because it continued to blow right past my long strike, and I would have lost all the width of the spread, the $500 minus the 65 that I got up front. So that is the risk with 0 DTE, and because I stayed to the plan, I got to trade another day. All right, and then moving on to next week, on Monday, I had no trade. Because of last week, I used all 3 of my day trades since I got stopped out on all 3 of them, but the first day of the week was a Tuesday, meaning that it's only been 4 trading days since my last trade, so I didn't have a day trade reset for me, therefore I couldn't take one. And that is something very important to note that you should put into your strategy. If you have an account that's under $25,000, subject to the pattern day trader rule, do not trade a 0 DTE trade. Because what if you need to get stopped out or you want to close early? You won't be able to, and you're just at risk of whatever the market's going to do. So that's a position that you don't want to put yourself in, and I have had a max loss, and it is not fun. So I didn't make one on Monday, but we can move right to Wednesday. And on Wednesday, I did an iron condor. This is my 4th loss in a row, guys. And I sold the 44.25 put and bought the 44.20. I sold the 44.80 call and bought the 44.85. So on Wednesday, the large cap companies kind of had some weak trading activity going on, but until Microsoft revealed that they would have an 11% increase in dividend payouts. So in the morning, it didn't seem to me like there was any sort of trend starting to happen, but obviously we can see it was somewhere around 11:50, right about noon, that the S&P started to get some buying action and continued to go on throughout the day. They stopped all selling behavior. Hindsight being 2020, I could see a trend line forming from this very first drop at 9:40. Continued to hit these points throughout the day and even hit that right before close. So had I seen that or tried to look at that within the first place, I would have just done the put side and not done the call side, so I didn't have to risk that. But if you only looked at from where I opened and before, it looked pretty neutral to me. Maybe I should have seen that there was higher lows, and that could have been an indicator for the trend. And for this day, I took in 80 cents worth of premium, got stopped out at 2x for 160. I had another loss, 4 in a row, but I got to trade another day. So let's go ahead and move on to Friday. So I did a call credit spread this day. I sold the 44.80 and bought the 44.85. This was a quad witching day, which means that all of the different commodities options all expire on the same day, the normal market, the futures, etc. And all that means is it leads to a little bit more volatility throughout the market. And September is traditionally the most volatile month of the year anyway, and that has definitely been proven true over these past couple of weeks. So the market was not looking forward to Biden's tax plan that was going to be released on Monday, and there's also a Fed meeting that was going to be happening on Tuesday and Wednesday. So due to these unknown fears, their market started to sell off in the morning. I did not think there was going to be a reversal. I did not want to fight the trend today, so that's why I did the call credit spread. And I opened this about 10:11 and didn't even come back to test it throughout the day. Remained to sell off / stay stable throughout the day. And it expired worthless. So this was an awesome recovery to end the losing streak. I'm hoping I can continue this trend and just keep the winning coming. And I'm still looking forward to how much this strategy can generate. All right, guys, so that's just a little recap of the past couple of weeks, what's been going on. I didn't get to update you guys last week. Life's been pretty busy lately. And just some of my thoughts that I had about trading 0 DTE. I think that it is a little bit more of an advanced strategy that possibly can't be the first one that you ever try, but after dabbling with options for a little bit, you will be able to get into this strategy. If any of this content was helpful to you, go ahead and leave it a like. It helps me spread more to people on YouTube and just puts me into the algorithm, which lately has been working great. So thank you all for all that you do and continuing to support me through this channel. All right, guys, I hope next week will be a little bit better results and won't be in the negative. So until next time.